Hi friends, this is Madhu Reddy from Money Breeder. Today I am going to discuss about one view-based option strategy where we will be having the some trading system which will give us the direction, market direction. Based on the market direction we will select the strikes, and also the strategy will have the proper hedging, and also uh, the strategy will have the long term options like monthly or for month, that means next month options, so that it will be having the good edge for us. Before going into the strategy details, this is the standard disclaimer. I am not a SEBI registered analyst or advisor. Please do uh, your own research before attempting any trades. And also you analyze the risk. Derivative markets are will have a lot of risk than reward, so you must understand the risk before attempting the strategies. Okay, coming to the strategy, see the trade setup. Let us build the trade setup first. Based on the trade setup, trend identification we will find out. Strike selection, which strikes we have to select. Under trade management, once we enter into the trade, how to manage the trade, and profit loss booking. Okay, all these things we are going to discuss one by one today. Okay, this is the chart. What I prefer to have chart is, most of the time, why we need the trade setup. Okay, most of the time what happens, let's say for example today is the March 6th. US markets was very bearish. Everybody thinks that it is going to be the bearish day, but what happened, all of a sudden market turned into the bullish due to the banking, all the banking stocks as well as the IT stocks. Okay, as per the US market, people think like whenever the Nasdaq, all the top IT stocks having the correction, that means Indian IT stocks also going to fall. But what happened today, it is entirely moved reverse. So this is the bias. Okay, most of the time, being a retail investor, because we don't know, we are the reactive traders. Okay, somebody initiates, we react for that initiation most of the time. To avoid such kind of bias, right, we need to have the one trading system where we execute our trades just like a robot. Okay, based on the system we will proceed. What that helps us, like to avoid the bias, number one, and also react based on the, whenever we feel like it is bullish or bearish, the view. Okay, see, as per my understanding and my experience, most of the time Nifty, see, I use the 25 minutes chart. The reason for using the 25 minute chart is the total from morning to evening, right? The total number of candles it forms, 25 minutes candles, it is complete candle. Okay, just like if you take the 30 minutes candle, right, you will not see the entire candle within the time, because total number of hours divided by 30 means you will get the some zero point 0.5 or something. So half candle only you will be seeing, so rest of the price action we are missing. To avoid that, I use the 25 minutes. See, since this trading view is a premium version, so I might be having this all time frames allowing. In case if you are not allowed for all the time frames, you check 15 minutes also or 30 minutes. Okay, these are the time frames you can proceed. Okay, first what you need to have is, have the time frame of 25 minutes or 30 minutes or 15 minutes, whatever it may be, and have the 200 moving average. This is very just a simple moving average. Okay, simple moving average, have the simple moving average. Let me try to what we will do is, whenever the price moves above the 20 moving average, okay, whenever the price moves above the 200 moving average, this is where the 200 moving average, what we will do is, okay, once whenever it moves, right, if the candle closes the 200 moving average above, this is the previous low, okay, this is the previous low. Before this low, right, what is the low? We need to identify that low. Okay, this is the another previous low. Okay, this was the immediate previous low, and the next previous low was this one. So what we have to do is, okay, the moment price closes above the 200 moving average, go and select the strike. This is the P, out of the money put option. Okay, out of the money put option. In this case, okay, 21,500 is the put option. So for this put option, the hedging should be, let's say the hedging should be like, if you collect the premium of 200 points, okay, you need to buy 100 points as a protection. Okay, and also this is good for the, always this is very good for the monthly options, okay, not for the weekly options, because Nifty moves 400 points within a day, upside or downside, so it will give you the panic. To avoid those things, right, we need to choose the monthly option. I always pick the next month. Let's say this is the March month, I will go for the April month. Okay, I will go for the April month. What is the strike selection? 21,500 is the strike selection. In this month also, I made the strategy. I will show you. All these are my strategies. Okay, all this I made it. See, the same strike prices, multiple strategies I built. So I run one of the strategy in my wife account. Okay, somewhere I moved, I think. 1 second. Okay, this is the bull put spread. What we did is, the market, right, it closed above the 200 moving average, that means I always feels bullish. Okay, once it closes above the 200 moving average, consider it as a bullish. So that's what I choose the 21,500, 192 premium, approximately half of the premium I sold. Okay, this is April month. Today we booked the profit of 10,000 rupees. This trade I do posted in the Telegram channel, where yesterday I posted in the Telegram channel. This was the trade. Today we booked the 10,000 rupees, which is 5%. Okay, 5% of our capital. 10,000 rupees is 5% of our capital. Our capital requirement is around 2 lakh rupees, which is 5%. Once we get the 5%, we book it. Okay, and we will shift to the what we do is, this is over. Our trade is finished here now. This is 21,500 is finished. Where is the market currently? The market, see, after breaking out, right? After breakout, what happened was, see, this was the place where it got breakout. Okay, if you take the 25 minutes chart, right, it will give you the perfect picture. Okay, once it breaks the 25, now it came back and it breaks the previous high, right? This is the previous high, it breaks. Now this is the low. For this low, what is the next low? Okay, this was the next low, which is 21,900. Now what we are planning, let's go to the Nifty. Okay, go to the April month, April 25, 21,900. 21,900 is the PE. Sell this PE. Okay, always go with the 6 lots, which is 2 lakhs rupees. Okay, 900, 170 points. Off means around 80. Okay, you can pick this as a buy for the protection. Okay, we don't hold this position until the end of the expiry. Again, if the market moves, we are going to shift. Okay, now 25,000 is the max profit. Max loss is the 1,25,000. Okay, 1,25,000 it won't come. See, the break even point is 21,800 above. Okay, if the market closes 21,000 above, 800 above, we will get the profit. We will not hold until the expiry. Once in between, right, up and down, it will be there. So the exit criteria will be like, let's take example by example. Now after we initiated the trade here, okay, once we initiated the trade, the market, our expectation is it is breakout here. Okay, it may retest back and go up, right? This was our expectation. So instead doing that, right, what happens, this 20 moving average slowly it moves. Okay, market also it comes in this direction, it closes below the 20 moving average. For example, the moment we see the market closes, end of the day market closes below 200 moving average. Sorry, by mistake I am keep on talking 20 moving average. You consider it as a 200 moving average. Okay, once the market closes below 200 moving average, immediately if our position will be in the profit. If it is in the profit, you exit the position, or if it is in the loss, okay, if it is in the loss, you start selling the call option from here. Same logic. Okay, let's take 200 points call option you are selling, which is what is in this case, which is 22,500, which is 22,500, 200 points, and buy 22,700 or 800. Now what happened? The moment you start selling call option, which is 22,500, see, just this is not currently it is bullish, so we will not be having the data. So I am buying this half of the premium just for the sake of showing. Now what happens? This is going to be the iron condor. So this is going to be the iron condor. Once you convert into the iron condor, okay, if you wait for few days, right, since it is the monthly option, for month, if you wait for few days, your position will come into the profit. Okay, even further, if the further move starts, either if you are instead doing the adjustment, okay, what you have to do is, if your position is in the profit, you exit it, because you made it here. The market, see, immediately it will not close, right? This is the 25-minute chart, 200 moving average. The price will not close immediately. It will take 2-3 days at least to close. By the time decay will come, you will see 2,000 to 3,000 rupees profit. Okay, you can exit it. Always it will be, most of the time it will be in the profit. Okay, we are running this strategy from many days actually. So similarly, if the market closes, let's take the example. Okay, market is in bearish. How you will consider the bearish? The moment market closes below this 200 moving average, okay, this should not be the bearish market. Okay, below 200 moving average, and it should break the previous low. Once the market closes the below 200 moving average and it closes the breaks the previous low, you consider it as a bearish market. Start selling the call option freshly. You start selling the call option. In that case, what happens? This is the 200 moving average. This is the previous high. Okay, this is the previous low. The price came and broke this. Okay, 200 moving average. This is the low, not this low. Okay, next low is this one. For the protection, it has to break this first level, and it takes a lot of time to break this. By that time your decay will come. This is the next level. Call option you are selling. Same logic like 200 points you sell and buy 100 points. Okay, you hold until it closes above the 200 moving average. Okay, immediately the day you initiate, immediately it happens, right? 400 points down or something like that. If that happens, right, you start taking the reverse direction where the put option also you start selling. Once if you wait for 1 week or 10 days, right, market will have up and down. In between, since it is the sell position, okay, you will see the profit and you come out of it. Okay, so we define the trade setup. Trade setup is 25 minutes or 30 minutes chart with 200 moving average. The trend identification is simple. The moment the candle closes about 200 moving average, okay, previous high breaks. Okay, these two conditions meets, right, where we have to initiate. This is the previous. Go here and sell this option, previous low. Okay, sell this option. This is the put option. Since it is bullish, so we have to sell the put option. Similarly, if it is bearish, how we will consider bearish? Market has to close below 200 moving average and previous low. Okay, if that breaks the previous low, you consider it as a bearish and go ahead and sell the previous, wherever the previous high strike was there, you start selling the call option. So until unless the problem with iron condor, right, the day you initiate, okay, immediately it reaches here, we have to start making the adjustment. Too many adjustments, okay, too much capital is required. To avoid these things, I always go with the view based. Okay, go with the view based. Very simple. Go with the view based. First initiate the call or put option, CE or PE. Okay, if this is the view based, as long as it is in the bullish, you will get the money. Okay, once previous high breaks, you initiated here. This is the low L1, lowest one. This is the lowest 2. This is the highest. Now it breaks. Right. What we have to do? Close this position and shift to this position. The moment it comes back and closes, initiate the call option from here. This is the simple adjustment. In worst case, if you see some defined loss 10,000, okay, you close the trade. And wait for market to move here and there. Once again this pattern comes, you can decide. Most of the time, either it is in the bullish side, either it is in the bearish side, or in the sideways. Most of the time it will be in the sideways. Okay, nowadays Nifty always having the trend retracement. To avoid this thing, right, if you go with the sideways, definitely it is going to hit the next edge. We will be ending with the losses. To avoid this loss, I was thinking to make this, and successfully I was executing this strategy. Okay, this is how what we discussed here, the exit criteria of the trade, okay, the trade initiation, the strike selection, the adjustments part. The total capital required is 2 lakh rupees, which is the total capital is required for 2 lakh rupees. Okay, normally in worst case you need to add the call option also, where you need additional 2 lakh rupees. So total 5 lakh rupees is required. Whenever you sell the option, okay, in case you don't have the money, more capital, better go with the 2 lots or 3 lots or 1 lot. Okay, you practice 1 lot for 6 months. After that you start increasing your lots. Since I trade with, by default, my default trade with 300 quantity. Okay, this is the, by default it will be there. Okay, so this is the simplest strategy I designed. I was executing successfully. You also try this if you like, and also you start with the 1 lot or 2 lots. Once you get the comfort, you will see. Okay, let me go to this chart. See the some examples based on the chart. If you see, right, it's rare, it never close the, see, this is where it breaks out below 200 moving average. It breaks out, you started selling here. Okay, by the time it reaches here, once again it falls, once again it reaches, right, how much money you will get. So this is all right. It will be few months, it will be range in the 1000 points. Since you are taking 1000 points range, next month options, definitely you will get very good premium decay. Okay, and also here it closed below 200 moving average. Okay, previous low was here, it never closed the candle below the previous, so no need to initiate the trade. Okay, let's take freshly, you initiated the trade here, somewhere here. Okay, it came here, it never closed the below 200 moving average, no need to exit. This is where you initiated the trade. Next time it closed the below moving average. Okay, from here to here, how many points? Here 21,800. okay, it closed 21,850, 900, around 900. Okay, if you get 100 points move, okay, how many days? This is the decay, right? Okay, if you might have sold the 200 points, right, this might have become like 160 to 150 points. Whatever you sold other premium might have become like 80 points. So per lot 20 points you will get, 20 into 50,000 rupees you will get from here to here. This is the beauty of this strategy. Okay, this is the view based. You should not have the bias, nothing, just you follow the system. Whatever this will give, you enter, hold the position until it closes, because you are in the option selling. Even if this closes here, after 2-3 days, definitely some decay will be there. Okay, for example, one more example I will show you my trade. See, this is the ratio spread I made. Since I was in the biased mode, so yesterday I booked this put option. Okay, you assume this put option is not there. Okay, so I am little bullish biased. What I did, I bought for 300 and I sold 118 into 2. Okay, 200 232 points, but 80 points less is there. That is where what I did, I sold the put option for, I went the same logic I used. What is the previous low? Previous low is 21,500 is the put option. Okay, 140 minus 60 points, that means 80 points. This 80 points I collected from the put option. Whatever the difference is there, right, this 80 points I collected from the put option. So whatever I purchased, same amount I sold out. This is what the ratio spread means. So let me take, like I have not booked this, the trade. Okay, this was my trade. Always I go with this kind of thing. Okay, so what I am trying to tell you is, on the 1st March I made, today is the March 6th. Even though market went, I sold two options here, 11,000 rupees loss. This is one option, it became 12,000. Still I am profit of 2,000 rupees. Of course, here I booked some amount because I felt some bearish market. So once it comes back, I wanted to take higher premium, but I could not able to take. Once I see the 3%, right here, now the capital, whatever the capital I used, 1.3 lakhs. Okay, for 1.3 lakhs, 5 days I got 2%. Okay, once I see the 3%, good enough. Okay, 3 rupees interest rate I wanted to earn from the option selling. Okay, so very simple methods, make it very easy, very simple. Okay, don't take too much risk, don't be too much aggressive. Okay, whenever you don't get the opportunities in the cash segment, use this methodology and sell the options. Thank you so much, friends. Okay, if you like this strategy and this content, whatever I discussed in this, okay, press the like button, and also please subscribe for my channel, share with your friends. Thank you so much.